avoiding the tax time bomb. I see so many people, they buy a building, commercial building, residential, or multiple units, and what's inside that purchase all wrapped together. If it's a commercial building or industrial, it's 39 years. If it's residential, it's 27.5 years for depreciation. The IRS only allows a certain amount of time to depreciate. You can't take the whole building all at once, but if we componentize it and do a cost segregation study, then we can expense portions of it, especially if we remodel and maybe put a new roof on the building or HVAC or carpet or whatever. And initially that's all included within that cost of the building, and we have to allocate land out, and we can't depreciate land, but then we depreciate over that useful life, the 39 years or 27.5 years. But if the roof is put in to the building initially and part of it, and then you go to replace it, you're still carrying that old roof on the balance sheet or on the cost and depreciating that over the useful life, instead of expensing it when you replace it and getting rid of it because you're no longer using it. And if you don't do that, then you go sell the building, you have to recapture that old roof and the new roof, even though the old roof is in the dump. And it's like paying for car insurance or for a car that you don't have. It's paying for something and then you have to recapture it because it's an interest-free loan that the government's giving you, and you have to recapture it. But you're having to recapture something and pay tax double that you don't have to pay at all. And it's like leaving a huge tip unintentionally. And I would say out of 100 accountants that I talk to, maybe one understands this concept, and one is communicating with clients the importance of cost segregation and the importance of taking these allocations and these components at the time of disposition. It's called partial disposition. It's called taking that expense when it's replaced instead of missing it and then having to recapture and having to replace that, not taking that expense that you're entitled to and having to pay double. And it's not smart. So that's where cost segregation studies is so important, because there's nothing you can do, because if you sell your property and you figure out, hey, I didn't take depreciation at all, or I was double depreciating things because of 2 roofs or water heaters or whatever it is, and it's not on the balance sheet, it's not on the books anymore, then you're gonna have to pay more. And that just breaks my heart.